Today at the March FOMC meeting, the Federal Reserve raised its target range for the Fed fund rate by 25 basis points, taking the top end of the range to 1%. This move was widely anticipated by the market, particularly given that Fed officials a couple of weeks back pretty much telegraphed this move. Now, I think today for the market was more about what the Fed was going to say about future policy, and here the Fed reiterated its December view that it intends to raise its Fed fund rate by three 25 basis point hikes this year and 25 basis point hikes in 2018. Now, I think the market coming into this was a little bit disappointed. They were looking for something a little bit more aggressive, potentially up to 4 hikes this year and next year. And as a consequence, we saw the US dollar sell off a bit and also bonds rally, with US 10-year yields down about 10 basis points to a little bit below 2.5%. The market was probably a little bit disappointed too that the Fed didn't say anything a bit more concrete about potentially unwinding its balance sheet. It's sizable to a $4.6 trillion balance sheet. In terms of how do we see the Fed evolving going forward? Well, our expectation is bang in line with Fed. We're expecting 3 hikes in 2017 and 3 hikes in 2018. But we do see the potential for the Fed to go a little bit more quickly. Why do we think so? For 2 reasons. Firstly, we see that fiscal policy under a Trump administration could be expansionary, so that would put more pressure on inflation. And secondly, the Fed is already pretty much close to its dual mandate of full employment and price stability. So what does this all mean, this rising rate environment? Well, for some borrowers, this could cause potential pain, particularly those that are overextended. But you really have to keep in context that rate structures remain very low. Rates are only rising very gradually. And the important point too to keep in mind is that a raising rate environment is a reflection that an economy is healthy. So US economy is healthy, global economy is looking a lot more healthy.